All right, we are ready for step 2 of our accounting cycle. So after making sure that a transaction has really occurred and needs to be recorded and identifying the accounts impacted and how they're impacted, we go ahead and record the transaction. It sounds so simple, right? Record the transaction. So we can't just say, oh yeah, it has happened and these are the accounts impacted, right? We have to formalize the recording, okay? So there is a specific process that we use to record any transaction. We're going to record the transaction through journal entries, Journal entries. So that's the process. In order for anything to get recorded into a company's financial records, and eventually those 4 financial statements that are issued to the public, in order for anything to appear on those, the data comes first here. We have to enter it through journal entries to get it into the company's records. All right, so that's what we're going to talk about next, is those journal entries. What are they? How do we make them? What's the format? All right. Oops. Hang on. So let's look at those journal entries. Oh my goodness. Okay, so now we're moving on to the later topics in the chapter, finally. I'm sure I'm not the only one that feels that way. This chapter takes me a good 2 weeks to get through in a regular class. It is a huge chapter and there's so many details that we have to make sure we cover. So if you're feeling like it's a long chapter, you're not wrong. It is. Right, so journal entries. So it's the way that transactions are recorded. Transactions are recorded through journal entries. Where are they recorded? They're made in a company's general journal. Made in a company's general journal. Every company has to have a general journal at a minimum. They may have other journals, but at a minimum, they have to have a general journal where all transactions are recorded. Okay, let me show you what it looks like. And I know not too many companies actually make it on paper. Back when I was in school, and back when I worked, one of my first jobs, I was doing journal entries on paper for a small business. Now, mostly everyone uses QuickBooks or some sort of app or Microsoft something, right? All right, so let's look. We'd have the name of the company name, and this is their general journal. The pages of the general journal, again, if we're talking about the old-fashioned hard copy ones, they would label the page number. So general journal, page 1. Okay. All right. They organize, all of your journal entries are organized in chronological order or by date. That way you can find your transactions based on date. We're going to organize them differently later, but in the general journal, they're organized by date. That's why your date column comes first. Then we have accounts and explanations. We have a posting reference column and a debit column and a credit column. Okay, and I'll upload a template of a general journal in case you want to print that out and have your own, so you don't have to write it every time, because the format is going to stay this way. These are your columns, very standard. Even if you're using QuickBooks or some sort of different interface, they've still kept the general journal format. All right, for a journal entry to be considered a journal entry, it needs to have 5 things. It needs to have the date of the transaction, right? Because we're organizing it by date. It has to have account titles, at least 2 account titles, at least 2 accounts. Okay. It has to have an explanation of the transaction. That's going to be the easiest part. It has to have a posting reference to the company's chart of accounts. And then it has to have dollar amounts. Remember that whole monetary principle, we have to express things in dollars. So the amounts will go in either the debit or credit column. Okay, some additional guidelines to help you when we're doing journal entries. The account, because you're going to have two accounts, so you might be wondering, well, which one comes first, right? The account being debited goes first. So the account being debited will go first. It is listed first. Notice I didn't say the normal balance, the account with the normal debit balance, because you might have accounts that have a normal debit balance that are being credited, or you might have credit accounts that are being debited. Okay, so whatever is receiving the debit should go first. Debits must equal credits, because that's the only way we know that that underlying accounting equation is still intact. Debits equal credits. You're going to indent the credit accounts. Indent credit accounts. All right, let's try one just so you can see a simple one. So let's say that we have an owner invest $1,000 into the company, So yes, we need to record it. Think of the accounts that are impacted: cash and owner investment for a corporation, common stock. Cash is increasing, that'll be debit. Common stock's increasing, that'll be credit. Okay, so we've done our identification, we've analyzed the accounts impacted and how they're impacted. Now we have to put them into this format. And let's say that happened on January 1st. January 1st. The account receiving the debit goes first, cash. We'll worry about the posting reference column later. Fun fact, there's no dollar signs in the general journal. You're going to indent the credit account, common stock. There you go. And now let's have an explanation. We said we'll worry about that later. Explanation to record cash investment from owner, something like that. The explanation, you're just describing what happened. Okay, so there's no right or wrong explanation. I guess the wrong explanation would be if you wrote something that had nothing to do with the transaction, right? Like, I am easily distracted by cats. That's true, but it doesn't describe the transaction. Okay, so there's a journal entry. All right, if you haven't already, I'm going to go ahead and work through some journal entries for the Dursley's example we were working on earlier. So maybe download that, give it a try, and then I'll see you in the next video.